Welcome back, and in this video we're going to be talking about reversal candlesticks patterns. So what do reversal candlestick pattern represent? They represent a change in a particular trend. So when we have been having a downtrend and the trend is about to change to an uptrend, you need to see some indicators, and those indicators are candlestick patterns. By the time you see them at support or resistance, remember, resistance is always above the price and support is always below the price. So when you see these candlestick patterns, it means that the trend is about to change. So if you have been having the downtrend, it means we're about to have a change of trend, which is uptrend. And if we have been having an uptrend, if we see these candlesticks, that means we're about to start having a downtrend. So the first one we're going to be talking about are spinning tops. So what are spinning tops? This is what they look like. This is an example of a spinning top. Let's talk about their properties. So a spinning top has long upper and lower wick. So you will see it with a small body, but it has long upper wick and lower wick. So when you see these candlesticks, it represents that neither the buyers nor the sellers had the upper hand during the trading section. If one is formed during a downtrend, it usually means that there are not so many sellers in the market left to keep driving the price lower, hence possibility of price stalling or a reversal. So for example, let me show you in a real life scenario. This is a spinning top. This is a spinning top. So we have been having a downtrend from here to this place. But when we saw the spinning top here, it shows that the sellers are no more in the market to continue to push the price lower, to continue selling. So it shows that buyers are now entering the market, which most likely will bring a change of trend. And that's what we are seeing here. There was a downtrend. After the downtrend, there was an uptrend. There's another spinning top here. So this is another spinning top, and after this uptrend, we saw that there are no more buyers in the market to continue to push the price higher. So what happened again? It started coming down. But remember, you can see spinning top in between charts. For example, this is a spinning top in between charts. It doesn't mean anything when they are in between charts. It means if it's not at resistance and if it's not at support, it doesn't mean anything. When you see them at resistance or support, then they mean that the trend is about to change. Do you understand that? So if one is formed during an uptrend, it means that there are not so many buyers left in the market to keep driving the price higher. That's the example we gave here. When we saw the spinning top here, it means that there are no more buyers in the market to continue pushing the price up. So the price started dropping. Do you understand? That's basically what spinning tops do in the market. It just shows change in trend. So let's go to the next candlestick pattern. The next one is Maribozu. Maribozu basically represents huge activities of either the sellers or buyers in the market. When you see a red Maribozu, it means that there are so many sellers in the market to continue driving the price down. The buyers don't have the upper hand here, so you don't expect to see any buyers in the market here. So when you see Maribozu, most likely the price will continue to drop. But when you see a bullish Maribozu, which is activities of the buyers, it means most likely the price will continue to go up. So a green Maribozu means open price is low price and the close price is the high price. In this place, there are no wicks. There are no wicks in Maribozu, so you only have the opening price and the closing price. So there was no fluctuation in price during the trading hour. So where the price opened was the lowest and where the price closed was the highest for a bullish Maribozu. But for a red Maribozu, the opening price was the high price and the closing price was the low price. So a Maribozu indicates that an asset has traded strongly in one direction. It means that, so a bearish Maribozu represents that the sellers sold so much that the distance between the opening price and the closing price was so much. So it indicates great trading activities in the market. They usually don't have wicks, as I said earlier, but occasionally they could form tiny wicks, but that's rare, and it's also rare to see Maribozu in the market. So watch out for them. When you see them, it means most likely a price will continue to go down. Or when you see bullish Maribozu, most likely price will continue to go up. Please note this, it is very important. When you see a bullish Maribozu, which is a green Maribozu in a downtrend, it means the trend is about to go up. Do you understand? When you see a red Maribozu in an uptrend, that means a price has been going up, and you see this red candle, this huge red candle, it means price is about to start coming down. That means there will be a change in trend pretty soon. So that is all about Maribozu. And the next one is Doji. So what is a doji? Doji forms when the security open price and closing price are virtually equal. So this means that the opening price and the closing price will be at the main point. And this also indicates the struggle between buyers and sellers in a trading session. So for example, let's see it in a real life scenario. This is a doji. This is a doji. So this shows that the opening price and the closing price is the same thing, even though it has wicks. It has upper wick and lower wick. But remember, when the opening price and the closing price is the same, so when a product opened at $50 and also closed at $50, it means most likely that candlestick is going to be a doji at the end of the day. It indicates the same force of activities between buyers and sellers in the market. So when the opening price and the closing price is the same, this means that price did not go up and price did not go down at the end of a trading session. Remember, if price went up, the closing price will be above the opening price. If price went down, the closing price will be below the opening price. So with a doji, the closing price and the opening price are the same thing. So when you see them in a downtrend, it represents a bullish reversal candle. When you see them in a downtrend, it indicates that the trend is about to change to an uptrend. And when you see them in an uptrend, it represents that the trend is about to change to a downtrend. So when you see them at resistance, remember resistance is the price ceiling, which is also the supply zone. So when you see them at that spot, it means the price is about to start coming down. But when you see them as support, support is the demand zone. It means the price most likely will soon start going up. And there are different types of doji, but they do virtually the same thing. So we have long leg doji. They look like this. So let me show you a long leg doji. They are so rare to find, but let's look for them. This candle right here is a long leg doji. You can see that the upper wick and the lower wick are long, while the body is extremely small, which means the open price and the closing price is virtually at the same point. So when you see a doji at resistance, so for example, from this point to this point is an uptrend. So assuming you saw this long leg doji here, it also means that the trend is about to change. So from uptrend to a down trend. Do you understand now? So all those candlestick reversal patterns, they do the same thing, which signifies a change in trend. So we have a gravestone doji. So when you see a gravestone doji, it means the open, the low, and the closing price are equal, and the high creates a long upper wick. So this is what it looks like. It means the opening price was here, the closing price was here, but the high price was this wick here. Do you understand? So when you see them in an uptrend, remember this, when you see them in an uptrend, it means that the trend is about to change to a downtrend. So when you see them at the top of a chart, so let's say you see a gravestone doji around here, it also represents a change in trend. So if you have been having an uptrend and you see a gravestone doji at resistance, it means there's going to be a change of trend soon. So when you see them, you want to be looking for a short position. Short position means when the price go down, you make money. Do you understand? So that's all for gravestone doji. The next one is dragonfly doji. Dragonfly doji is similar to gravestone doji, but dragonfly doji represents a bullish reversal pattern. So it means that when you see a dragonfly doji at support, when you see it here in the downtrend, it means that the trend is about to reverse to an uptrend. It means the trend is about to change to an uptrend. So once you see it in a downtrend, you start preparing to take a long. When you take a long position, you make money if market goes up. Do you understand? That's all for Dragonfly Doji. So the next doji is very rare in the market, which is 4 price doji. You will rarely see this particular doji in market. It means the opening price, the closing price, the high price, and the low price, all of them are at the same point. They are all equal. So when you see 4 price doji in an uptrend, it means the trend is about to change to a downtrend. But if you see it in a downtrend, it means it's about to change to an uptrend. So that will be all for all types of doji. So when you see doji in an uptrend, you get ready to look for shorts in the market. But when you see it in the downtrend, you get ready to look for longs in the market. Do you understand? The next one is Hammer and Hangman. Hammer and Hangman, they both look alike, but it depends on where you see them. Hammer is a bullish reversal candle pattern that forms during a downtrend. So this is what Hammer looks like. So when you see anything like this in a downtrend, if there has been a downtrend in the market and you see Hammer at support, you'll be getting ready to take a long position. Do you understand? So when you see it in a downtrend, it means buyers are so much in the market and most likely the price is going to go up. It must have very little or no upper wick. As you can see, there's no upper wick. When you see something like this in an uptrend, it is called Hangman. And Hangman is a bearish reversal candle pattern. When you see it in an uptrend, it's also Hammer, but when you see Hammer in an uptrend, it is not called Hammer again. It is called Hangman. And when you see it, it shows that there's going to be a reversal very soon. So when you see it in an uptrend, it means the trend is about to change to a downtrend. The properties are similar, as you can see. So when you see Hammer in a downtrend, it means the trend is about to go up. But when you see Hangman in an uptrend, it means the trend is about to go down. The next one is inverted hammer and shooting star. So inverted hammer is a bullish reversal candle pattern that forms during a downtrend. And remember, it must be at support, not in the middle of a trend. The properties are, it must have long upper wick, about 2 times of its body length. You can see that the wick is about 2 times or more than 2 times of the body length. But when you see something like this in an uptrend, it is called shooting star. They both are, they have the same properties, but where you see them is the major difference. So when you see shooting star in an uptrend, it means we will soon be having a downtrend in the nearest future. So when you see it, remember it is just a reversal candlestick pattern. So I hope you understand what inverted hammer and shooting star are.